Now, let me start by giving you our take on the implementation of the RRF after just 1 year. I mean, it's important to remember that this is a new instrument, and it really is a big deal for the euro area and the EU. It's the first time we have a common central fiscal capacity of macroeconomic scale that allows us to respond to economic shocks hitting our member states. Now, it was designed with COVID in mind, but actually, if you look at it, it's actually very well tailored to addressing the current shock to energy and commodity prices resulting from Russian aggression in Ukraine. I mean, to be honest, if the RRF didn't exist and you were designing an instrument to respond to the current shock, you would come up with something very similar to the RRF. And it's worth bearing in mind that a lot of the investments already are targeted at the transition to renewables, energy savings, sustainable transport. We do need a complement in terms of REpower, but it's actually a very good instrument to respond to the shock where our economies are going through. So it's a big deal fiscally, but it's also a big deal in terms of the governance model and the way we interact and coordinate policies with member states, because it's the first time we bring together reforms and investments, and it's an instrument which is based on performance as opposed to providing funds in response to incurred costs. And that means what we care about is actually delivery and implementation, and not the nitty-gritty detail of all the invoicing and the detailed costs. So how is it working after 1 year? The answer is it's working extremely well. I mean, I have to say we are very, very pleasantly surprised at how well it's working. We have 25 plans approved. We're still waiting for Holland to submit. We're still discussing with Hungary, but we have 25 plans approved. We have already received 11 requests for payments, okay, and we've actually paid out on seven to date. We hope some more in the course of July, and we have dispersed 100 billion euros in the past 12 months. Now, I don't have the exact figure, but just to put a scale on that, that is, I think, the same or possibly even more than the combined spending of the EU budget on the Common Agriculture Policy and all of the cohesion funds. And that's how we've been able to scale this up in 12 months. We already see, in terms of our national budgets, that at the euro area level, it's contributing 0.5% of GDP this year in terms of additional investments. And that figure is much, much bigger in a country like Greece, probably above 1% of GDP, and probably will grow because of the very generous allocation. The other point I want to say about implementation is I think what's really encouraging is it's working best and it's working fastest in the euro area countries which need it most. If you look at the countries which have completed payment requests, I mean, the countries are, it's Spain, which is already on its second payment request. We hope to disperse still very, very soon. Italy has completed one and has already submitted their second payment request. It's Greece, and I definitely include Greece in this country. We have Portugal. We have Croatia, soon to be euro area country. These are the countries with the largest allocations, with, I would say, the biggest need for reforms and investments given the challenges facing their economy. And it's real reforms. If you take what's happened in Italy with the adoption of a major reform of the justice system, the criminal justice, the civil justice, the administrative justice, insolvency law, and it's being implemented. In Spain, first time, 40 years, a common agreement of social partners to reform labor law, to tackle duality in the labor market. So, we really are encouraged in terms of how it's delivering. Maybe I can just turn to Greece very briefly. I mean, first of all, I think we very much include Greece in the country of front runners. We see that it's already one disbursement has been made. I mean, I think it's 6.1 billion euros, has already 3% of GDP has been transferred to Greece already. We're working, and I know the minister is working very hard on the second payment request, which we hope will come in September, which would be another 1.7 billion euros. So it really is in the front runner. We think it's a good plan. We think it's well founded. But I think what we are most encouraged by is the pace and quality of delivery. And I think it comes from really very, very high level political support combined with a really good administration to ensure swift and sound implementation. Now, clearly, it's a lot of work and there are challenges. I think, against the current economic background, what's going to be critical for a country like Greece, which, has high debt and remains exposed to changes in market sentiment, what's going to be critical is that Greece hits its deadlines for the submission of payment requests under the RRF and receives a steady flow of disbursements from Brussels in the next 6 to 12 months. So there's the second payment request, we're expecting it in September. There's some work to be done there on rail reform, on the renewables, but I think we're optimistic that will happen on time, and I think it will be important to show that this is working. There's a third payment request. It's actually a bigger payment request, probably due at the end of the year, actually double, 3.5 billion euros. And then, of course, there's the final tranche of debt relief from the Eurogroup partners. I think if Greece could really hit those targets and continue to have this steady flow of disbursements from European partners, it would be the strongest signal, I think, to investors and financial markets that things are working and Greece can get through what is going to be a difficult period. Thank you.